Hello, very good afternoon. Welcome to another Currencies Direct Sterling Euro weekly podcast with me, Keith Spiddlenick. It is Friday, the 11th of February. Well, Sterling Euro, we're now trading at 118.49, so we're nearly a full cent higher than where we were this time yesterday, but still under that oh so important psychological 120 level. This week, well, largely really a case of treading water for sterling. Of course, the biggest news we had this week, or should I say the biggest non-event we had this week from the UK, was the Bank of England's interest rate decision. Recently, just been a question really of will they, won't they raise interest rates over the coming months, and surprise, surprise, they left interest rates on hold at 0.5%. Now, as we know, last month's minutes of the Bank of England, there was two members calling for an interest rate hike. There was Andrew Sentance, who's recently been joined in his views by Martin Wheel. But as we've said all along, the chances of a rate rise, at least this time around, it was always going to be fairly slim, because in terms of economic growth, well, in my opinion, it would have been a wolf in sheep's clothing, would have certainly done more harm than good. So in the short term, sterling's probably going to remain fairly range bound against the euro. We could see it move higher in the coming months as the markets respond to this rumour mill that's constantly churning out all this talk of imminent interest rate hikes. Some say beginning as early as May of this year. Now, let us not forget, with all these austerity measures that we have in place in the UK, been introduced into the UK system, UK is going to find it very hard indeed to see any significant economic growth. The public sector is being hit, and it's being hit really hard. We just learned, in fact, that around 10,000 police jobs are going to go over the next 2 years, which surely begs the question, how many more jobs are in the firing line? So, euro-wise, well, the single currency is certainly not holding up too well at the moment. Recent news this week is European stocks are currently down. The Irish banks have, of course, been downgraded, meaning they're not classed as a safe investment compared to how they were previously, and all of which really emphasises that the Eurozone is still struggling, still in very rocky waters. That's all for me for this week. Please have yourselves a fantastic weekend, and I'll be back next week.